This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, so let's begin to look at indirect tax. And within the notes there, you've got plenty of definitions and plenty of terminology. Okay. But what I'm going to do is just going to draw up a separate page of paper just to go through there and try and summarize things, and then you can copy it down if you so wish. You can just observe. It's up to you. Okay. So what we've got there is we're looking at indirect taxation. What is indirect taxation? Can you remember from the introduction? Yeah, okay. It's a tax that's levied on one part of an entity, isn't it? Or if you like, one part of a business that is then passed on to the government, isn't it? And the prime example that we had there was that we spoke about was it sales tax, wasn't it? Okay. So what you've got there is indirect taxation works essentially in two ways. You can have the indirect tax based on a unit tax. Oh, that's an awful straight line, isn't it? And also indirect tax based on what's referred to is an ad valorem method. So a little bit old school, a little bit Latin there. Coming back to haunt us from our days at school if you ever studied Latin. Okay. Key bit about your unit tax is that is a tax which is based upon the amount of goods that you are purchasing. Okay. So what you've got there is that is based on a number of units. So it is a tax maybe based on an amount of tax that you pay per kilogram of goods. It could also be an amount of tax that you pay per say 1,000 units. Okay. So it's based upon a unit, isn't it? Okay, the number of kilograms, or if you like, just simply the number of units. Okay. Prime example that you have with regards to your indirect taxation there is going through and looking at, is it your excise duty? Okay, so that's whereby you pay a tax on the amount of the commodity that you are purchasing. Okay, so maybe you are buying a litre of spirits, you will pay an excise duty, a unit indirect tax on that litre of spirits. There will be an amount that you pay incorporated into the final price that you pay for the goods, that is the excise duty. Okay, you could also as well, I suppose, there as well have an import duty. If the goods are imported from overseas, you will also be paying an import duty as well as, if you like, an excise duty. Okay. Key bit about your excise duty there is that excise duty, if I can squeeze it in, is also a consumption tax, because you are purchasing the goods, you are consuming the goods, you are consuming the spirits, if you like, or consuming the cigarettes or the tobacco or the oil, whatever it may be. So the excise duty is a unit tax, it's an indirect tax, and it's also an example of a consumption tax, isn't it? Okay. Ad valorem indirect taxes are whereby it is a tax based upon the value of the goods or the value of the services. So, in the UK, we have sales tax, it's referred to as VAT. You pay not based on the amount of the kilograms that you're buying or the number of units. You are paying a rate, aren't we, of tax based upon the value of the goods, isn't it? Okay, so if you buy goods that are $1,000 net of tax, obviously you wouldn't pay dollars in the UK, but everything in the CIMA qualification is dollars. So if you paid $1,000 net of tax, the total amount with tax on top, 20% on top, will be 1,200. So that there is an ad valorem, if you like, indirect tax. So one that you've got there is your sales tax. And again, when you're thinking about your sales tax, that is also a consumption tax, isn't it? Because you are consuming or you are buying or purchasing the goods. And then what you have there is other ad valorem ones are there is it as your property tax. So maybe the government charges you a tax based on the value of your property, so whether that's the land or whether that is the buildings. In the UK, we tend not to have a property tax on the owner. Okay, there is, if you like, a tax on the people who are using the property, and that's referred to as council tax. Okay, but there's no, if you like, direct property tax on the owner. Okay, council tax falls upon the person who is using the premises. And then what you also have as well is that in some jurisdictions, there is also a wealth tax. Okay, so the richer you are, the richer the value of your assets, you will pay tax on the value of those assets. I think there's a wealth tax that exists in France, but it is only appropriate for the super wealthy. If your assets or your overall net assets in France are worth, I think the last figure I saw was about 1.3 million. Obviously, that will change depending upon how tax rules change in France. But if your assets were worth 1.3 million, that would be nice, wouldn't it? Okay, to have that amount of assets. If that's the case, then you would pay tax on a particular amount of those assets. I'm sure there would be a relief given, and you would pay tax on the net amounts. Okay, but again, the tax is based upon the value of your wealth. Okay, the value of the assets that you own. Okay. There we go. So that's just a brief introduction in terms of what indirect tax is. I think it just summarizes it up there, doesn't it? Maybe a little bit better than just going through there and talking about the bullet points. Okay, but again, it's bits and pieces that you need to go through and learn. Okay, because again, objective test questions could say that excise duty is an example of which types of tax. Well, it is, again, it's an indirect tax, isn't it? It is a consumption tax and it is a unit tax. Okay, so just be aware that it could similarly say a wealth tax is an example of which of the following. Well, it is indirect, isn't it? It's not a consumption tax because you are not purchasing the goods or services, you already have it, but it is an example of an ad valorem tax. Okay, yeah, so again, practice, the most important thing, isn't it? Let's just go through there and focus a little bit more specifically on the one that the syllabus wants us to focus on, which is sales tax or the VAT. Sorry to be all UK, but that's what we have here. Value added tax. Okay. Again, we've already said there that it is indirect. It is also a consumption tax, and also as well, it is an ad valorem tax, isn't it? Because it's based upon the value of the goods that you are consuming. Okay. Again, key bit is that it is a tax on the final consumer of the goods. So to the final consumer of the goods, it is there, isn't it? Going through and looking at your effective incidence, isn't it? Okay. The formal incidence falls upon the company that is collecting the tax to pay to the government. Okay. Just be aware, we're not expected to know the different rates for the UK. But you are expected to have a knowledge of the different types of rates that could potentially exist within your jurisdiction. Okay, you could have what is referred to as your standard rated. So that's your day-to-day goods that you buy and consume. In the UK, the standard rate is 20%. Seems to be fairly consistent across Europe at 20%. But that's your standard normal rates. That's what you normally pay on your food, on your drinks, on the clothes that you go through and buy. We'll talk about specifics and intricacies in a moment. It could possibly be that there is a higher rate on higher valued goods. Again, in the UK, we don't see much of a higher VAT rate. It tends to be standard rate or something else. Okay. In the UK rate, the standard rate is usually 20%, but for some goods it does change. For commodities, gas, electricity, I think it falls to about 5%. Okay, but still referred to as the standard rate. You've then got, is it the zero rated and is it exempt? Okay, they are very, 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 very similar. Okay, zero rated means that there is no VAT charge on the goods. Common example that you've got there tends to be in the UK children's clothes. Okay, it's a bit unfair, isn't it, to tax the consumer of the good, the child, if you like, the family of the child, when the child is growing and will need new clothes, new shoes on a regular basis. I've been there. Okay, yeah, costs a fortune for your child. You don't want to have to pay a tax on top of it as well. So clothes, children's clothes, I should say, are zero rated. Okay. This then brings in all sorts of weird and wonderful intricacies in the UK tax system. Books are zero rated, so there is no VAT on your books, but e-books, they are standard rated. Okay, so you would pay tax, or you would pay sales tax if you were to purchase an e-book as opposed to going through there and purchasing a paper copy of a book. There are probably some weird and wacky, wonderful reasons for it. Other one that you've got there as well, I think, you can correct me if I'm wrong, but we said standard rated applies to foods. There are particular foods that are zero rated. So I think frozen foods are zero rated in the UK. My other favourite one is that your standard rated applies to potato based snacks, so crisps. But if you get maize or corn based snacks, so in the UK we have this, I call it a crisp, but technically it's not a crisp, it's called a Monster Munch. And Monster Munch is a corn based snack, and that's zero rated. So I don't pay tax, if you like. I don't pay sales tax on my Monster Munch, but there we go. And the other, my overall favourite one is, I need to get this the right way around, is that standard rated falls upon nuts that are not in shells. Okay. Yeah, so your dry roasted peanuts are subject to standard rated VAT. But nuts, nuts that are out of shells, yes, that's what we said, wasn't it? Yeah, so your dry roasted peanuts, they are subject to standard rated. However, zero rated are when the nuts are in the shells. Okay. So there we go. It's a bit strange, isn't it? Okay. Let's just move on. Exempt supplies that you have tend to be bus fares, rail fares, and train fares. Okay. There's still no tax upon it, but what's the difference between something being zero rated and something being exempt? Okay. There's no obvious difference, as it says there. Key bit is that if you are involved in zero rated supplies, you can register for VAT. So if you are a book seller, okay, you can register there for VAT, which is important because when you sell the books, you can reclaim your input VAT. Okay, so the purchase of the book originally, when you bought it from your distributor, you can reclaim that VAT. Okay, however, if you make wholly exempt supplies, then you cannot register for VAT. So if you are a bus, a train, maybe a taxi company, your fare is exempt from VAT, and therefore you cannot reclaim your input VAT. Okay, but just note we have used the word there, haven't we? Wholly exempt supplies. Okay, maybe some of the supplies that you make might be not just wholly exempt. There might be some things in your business that you supply. So maybe you are a train company. The fare to charge the passengers is exempt, but maybe on your train journey, there's a little shop, and on there is some food. Okay, the food, the drink will be a standard rated supply, won't it? So therefore, you will be able to register for VAT because you do have some standard rated supplies, but you will not be able to reclaim all of your input VAT. You can only reclaim the input VAT on things that relate to the standard rated supplies. So that's, if you like, talking about, as it mentioned there within the notes, your partially exempt trades. It mentions the entity conducts several activities, some being standard, some zero, some exempt. The key bit is that you can register for VAT, but your right to offset the input is restricted. Okay, so you can reclaim your input tax, can't you? As we said, on standard rated or zero supplies, but if not, then you cannot reclaim it on anything to do with exempt supplies. Okay, there we go. Again, let's go through and just bring it in with an example. Okay, excellent. So what we've got, the example all about VAT. It wants us to calculate the amount A, B, C should pay, assuming there to be no other VAT related transactions. So it says AB is resident in country X, so all the old exam questions always referred to as country X. I think things have changed now with the objective test questions, that they give you specific rules in each specific question. But monthly VAT returns are required. At the end of each month, AB pays the net VAT due to the local tax authorities. So what you've got there is in the last month, AB purchased raw material costing 120, excluding VAT, which is chargeable at a rate of 15%. So the sales tax that you will be looking to reclaim is 15% of the 120,000. Is that there as 18,000? Okay. The raw materials were converted into two products, X and T, so they are our saleable products, which we would hopefully then charge VAT on. However, just be careful, product X is zero rated and T is standard rated. Okay, so there's no exempt supplies, so we can go through there and reclaim the VAT in full. But don't forget, product X, there's no VAT on it that we are collecting. So when it talks about product X was sold for 90,000, it would have been sold for 90,000 and 90,000 only. There will be no VAT on top of it. However, product T was sold for 130. Again, that's excluding VAT. So when you're looking at the VAT on that, 15% of 130,000. My mental arithmetic is still holding right. That gives me 19,500, doesn't it? So I have paid input VAT of 18,000. I have received output VAT of 19,500. The net amount that you have to pay is the difference, which is 1,500. Okay, excellent. Once more, just a little bit to note, just above the example. Hope you're happy with that example. It's nothing too exceptional, is it? Just be aware for the zero rated supply of goods, there's no VAT upon it. But just be aware, if you are reclaiming your input VAT and you have your partially exempt trades, if you're looking at things that are incurred in the production of the goods, heat, light expenses, and you're incurring VAT at standard rates, and if you like your zero rate, the key bit is your exempt rate. You would prorate the amount that you can reclaim based upon the amount of supplies that you have made, which are exempt, standard, and zero rated. So whatever the exempt proportion is, you would not be able to reclaim that input VAT. But I do think that's beyond the scope of the calculation within this exam. The questions that we've seen in the past have been pretty much as simple as that example that you have there. So practice a couple of questions on sales tax, indirect taxes. I don't think you can really go too far wrong.